This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This page that you have in your notes is vitally important in terms of answering a group statement of profit or loss question within the exam. Why? Because it's your pro forma. And if you can follow the pro forma, you shouldn't go too far wrong. So what we've got there is a 4-column approach in terms of the numbers, and then that 5th column on the left hand side being a narrative. Okay, because what you're looking to produce here are the group financial statements, so the group statement of profit or loss. So what we do is we approach it in a columnar format. So what we go through and do there is we consolidate 100% of the parent, 100% of the subsidiary, but be very careful. We only consolidate from the date that we acquire control of the subsidiary. So if we acquired control of the subsidiary at the very start of the reporting period, then yes, we consolidate for the full 12 months. But if we go through there and gain control partway through the year, then we have only got control for that period of time from when we made the acquisition. So if the acquisition took place halfway through the year, we would only consolidate 6 months worth of results. So what we need to go through and do there is prorate the results. We assume that all of S's revenues and all of S's costs accrue on an even basis throughout the year. Okay, so therefore we can just prorate them by X 12th. So you've really got to note the acquisition date within a question. Once you've done that, you're away. You can go through there and record in all of S's results, prorated from the date of acquisition. There's a couple of adjustments that you've got within there, but I'll come back to those a little bit later on in terms of PUPs and fair value adjustments. Just be careful. What you've got there is an impairment of goodwill through admin expenses, which is where you would expect it to be. So you can see it there. Just note that it will go in S's column if goodwill is there at the fair value method. Because if it is the fair value method, then what we have there is the full goodwill, isn't it? That goodwill belongs to the parent and the subsidiary. So we've got the parent and the NCI share within there. So if there is an impairment of the subsidiary under the full goodwill method, we need to ensure that we give the non-controlling interest their share of that impairment. And to do so, we put it in S's column. Just note, if it was done under the proportionate share of net assets method, then that would move from S's column into P's column. We'll just shift back one. But that's just something that you can pick up as you go along. Other bits and pieces that you've got there, I think, that are relevant at this point in time is the dividend income. Remember, in the group statement of financial position, we had an investment line in the non-current assets, which was the investment in the subsidiary. And we removed that investment in the subsidiary because we replaced it with all the assets and the liabilities of the subsidiary on a line-by-line basis. In a similar way here, we're going to go through there and ignore any investment income that has been recorded in the parent's books from the subsidiary. Because if you've received the dividend from the subsidiary and have recorded it in your books, then that dividend has come from the subsidiary's profits for the year. Now, if we're consolidating all of those profits for the year and then showing our share of the dividend, then we're effectively double counting that dividend income, aren't we? Because we've got the dividend income and then the profits that are consolidated from where that dividend has then come. Okay, so effectively you can't pay yourself a dividend, can we? So therefore we remove that dividend. So what we're going to do there is that what you will do is you will remove is it P share multiplied by S's dividend. So if you own 80%, you'll remove 80% of any dividend that the subsidiary has paid. Okay. There we go. You've then got your tax line, your profit for the year. Again, just notes, not just for your profits and losses, but also your other comprehensive income. The same principles apply. So you've got a revaluation gain in the parent and a revaluation gain in the subsidiary. Okay. So again, you add them across 100% on a line-by-line basis. One thing I would just note in terms of the gain on the revaluation of PPE within S is that you do not prorate that figure. Why? Because the revaluation gain takes place at a point in time, and that will be at the reporting date, usually within our questions. Yeah, that gain doesn't accrue over a period of time, it happens at a point in time. So therefore we either have control of it or we don't. If we have control of it, we will therefore consolidate. Okay, so just be very, very careful with what you have there. Once you've got that, you can then go through and total up S's column. You can have, is it there, your total comprehensive income. That's what's being consolidated. You then need to go through there and allocate the non-controlling interest their share of that total comprehensive income. And then by looking at the group total comprehensive income for the year, you can then deduct the non-controlling interest amounts from that to get you the amount that is then attributable to the parent as your balancing figure. Okay, there we go. So that's the pro forma. As I said, we'll come back to it at various points in time over the rest of this chapter and the following chapter as well.